The Groupon IPO seems to be losing momentum. And the stock market gyrations are not their only problem. They just declared for the first half of the year that they lost $211 million in cash. They also had to restate their revenues for the first half of the year from $1.5 billion to $688 million. The revenues have come down by more than half. The CEO has jumped ship and joined Google, and it seems that the investors are nervous because insiders of Groupon are cashing out from the venture investment and will be cashing out from the IPO. Now, Groupon is unable to comment on these issues because it's under a quiet period restriction. Now, from the actual filing of the IPO to the IPO itself, when the shares are declared effective, there's tight regulation on what the company can and cannot say, where and how it says it. This is called the quiet period. And the quiet period was put in place as part of the SEC enforced regulations that came in to the US after the stock market crash in the early 1930s. A whole new batch of regulation was put in place to protect investors. And the idea is that the whole SEC and the securities regulation in the US is primarily focused on disclosure. The company can sell bad eggs as long as it discloses their bad eggs. And the disclosure goes into the prospectus. Obviously, in the 1930s, you only had a prospectus. You didn't have Facebook and internet and LinkedIn and all those things to communicate, and Twitter to communicate with. The prospectus was the key document. And so the SEC forces the companies that are going through the IPO process. And remember, the IPO process is designed to enable the company to reach those unsophisticated investors, the mom and pops, Joe Public out there. And so the SEC forces the companies that are raising money from public investors to disclose fully in the prospectus their business, their financials, and any information that would have a material effect on someone wanting to buy or sell those shares. And then what the SEC wants to do is direct those potential investors to the prospectus, not to Twitter feeds and information disclosed by the executives of the company outside of the prospectus. Now, the executives of Groupon may feel as though they're bound and gagged right now. All their communications via Twitter, by Facebook, their emails will be scrutinized by the SEC. In the Google IPO, you may remember that the Google founders were sanctioned for having a Playboy interview during the quiet period. Now, the whole idea is to restrict these executives from being able to hype the stock. As I said, what they really want you to do is focus on looking at the prospectus if you want information about the company. Don't listen to Twitter feeds and all those things. Now, there has been some comment in the press about whether the quiet period is now outdated. The prospectus, with its warnings and disclaimers, is no longer the only source of company information. But how else are you going to protect investors from overzealous promoters who are going to start hyping the stock? I think the Groupon IPO may show that there actually is a need for the quiet period, and that the need for full accurate disclosure of financials and recast numbers in the prospectus is actually shows that the quiet period and the prospectus are still valuable, and you know, the fact that Groupon's had to restate all these things is vindication that the process is forcing them to be accurate in what they say when they're raising finance from investors. And they have to disclose the bad news as well as the good news. And the prospectus is still the most reliable source. Now, you may say, well, you know, you could argue that investors should know better than believing the hype. But remember, what the SEC is doing here is they're protecting unsophisticated investors, those investors that Groupon is aiming at the IPO. If they were raising a private placement from accredited investors, sophisticated investors, that would be a different issue, and there's special rules around that. So the quiet period and accurate disclosure in the prospectus may be irritating Groupon, but it's probably protecting public investors. The IPO is being postponed now, and this might be for the best.